So hey guys, it's Josh. Welcome back. Welcome back to one of our videos. And in this video, I'm really excited to tell you about this brand new apartment building that we just bought. We call this 80 Maple. This is 80 units. It's a value add apartment complex, meaning the former owner left it in some disrepair. It's in really good shape as far as like occupancy. It's well over 95% occupied, but a lot of the units haven't been updated in over 20 or 25 years. So the rents are low, there needs to be some improvements made, and we'll bring this up to its real value. So that's why I'm excited about it. We were able to buy this building for $3.745 million. And when we're all done with our plan, it's gonna be worth $6.2 million. I'll tell you a little bit more about that in a minute. We bought this building about 3 weeks ago, and when we closed, we immediately started executing our value add plan. So we sent out letters to all the tenants to let them know that we were taking over ownership, taking over management. We started looking at the vacant garages because we could quickly get those leased out and boost the income, which boosts the value. We immediately started looking at, okay, which units are vacant? And so we had 5 vacancies, just 5 vacancies out of the 80 units. I'm actually standing in one of those units. So this is a 2-bedroom, it's about 900 square feet. Right now, we're getting only about $700 a month for this 2-bedroom. So the rents are really low. So what we're gonna do is completely open this up. We're gonna get rid of this whole countertop in the middle. So you're just gonna have all of the sinks and the cabinets and the appliances here, and a nice big open space, dining room, place for people to go. We've got the half bath in the back. And then the rest of it's pretty standard. Living room in the front, pretty basic, new flooring, new paint. Upstairs, 2 bedrooms, and then a whole brand new full bathroom, which is gonna be awesome. This will get done for about $700 to $7,500, about $7,000 to $7,500 bucks. So our plan is to turn 40 of the units. When you're looking at buildings to purchase yourself, it's important for you to think through what's the business plan. So here's how it's gonna go. We bought the building for $3.745 million. We're gonna put $350,000 into the building. $280,000 of that's gonna go into the units, just like this one. About $25,000 is gonna go into the exteriors. It's gonna go into the landscaping. It's gonna go into the concrete, some of the point of sale violations, building violations on the exteriors. And then the other about $40,000 to $50,000 is gonna go into just improving the bathrooms only in the other 40 units. Because those other 40 units, there's some leaks, the bathrooms are outdated, so we're gonna update those. So again, purchase price $3.745 million, improvements $350,000. We actually paid ourselves, when we bought the building, we paid ourselves a 3% acquisition fee and an asset management fee. So we got $120,000 up front when we bought the building to manage the asset. That's our first stream of income. We also had about $160,000 of soft costs. So we're all in, you wrap it all up, for $4.4 million, $4.4 million. Now, once all those improvements are done, we'll be able to raise the rents. We've already notified the tenants that they can get an improved unit, and we will be able to pencil this out where the income is gonna go up by about $100,000. It's gonna go from $300,000 of net operating income to $400,000 of net operating income. That will push the value of the building up to $6.2 or $6.3 million. Now you might be asking yourself, well, Josh, how are you gonna make money? How do you make money from this? Well, there's multiple streams of income. First of all, we got our $120,000 acquisition fee. Second, we'll be all into it for $4.4 million. And it's gonna be worth $6.2 or $6.3 million. So we've got about $1.8 million of equity. So when we sell the building in the future, we'll have equity in the building. We can sell it, big, almost $2 million of cash. That's the second stream. The third stream is we're gonna refinance the building once it's stabilized, and we're gonna pull about $200,000 of tax-free refinance proceeds out of the building. That's our third stream of income, and that's tax-free. Our fourth stream of income is after the building is stabilized, it will generate about $120,000 a year of net free spendable cash flow. After all the expenses, after all the debt service, after all of it's gone, We got about $10,000 a month of debt-free spendable cash flow. And guess what? The building's gonna also appreciate in value. That's the fifth stream of income. Income stream number 6 is the principal pay down on the loan as the loan gets paid down every month by paying down the mortgage. And income stream number 7 is the ability to depreciate this asset on our tax returns every single year, which is gonna lower our taxes and offset our other income. So there's actually 7 streams of income from this building. So I hope you've enjoyed this video about 80 Maple. Let me give you some free goodies. Let me tell you about some free things and some things that you can do next. First of all, subscribe to this video. Number 2, make sure you check out our podcast. If you go to iTunes or wherever you catch your podcasts, look up Accelerated Investor or go visit acceleratedinvestorpodcast.com. If you want more information about how to get personal one-on-one coaching with me and my coaching team, go visit joshcantwellcoaching.com. There you can apply for a one-on-one spot in our coaching program. Again, it's free to apply, it's free to learn more, and it's free to go through our 30-minute consultation. So check out joshcantwellcoaching.com. Also, don't forget to check out our free webinar where I'll teach you how to find the deals just like this one, how to find multifamily deals, how to find off-market deals, how to find deals with sellers who have multiple layers of motivation that are looking to sell both the residential and commercial buildings. You can check out the link inside of this video and inside the notes right below.